make your assets invisible. So let me show you how this works. This is you. For my male followers, I drew a mustache. In my native language Punjabi, we call that a much. And for my female followers, I drew a braid. In my native language Punjabi, we call that a gut. If you have a lot of assets, let's just say you are worth, hypothetically, $1 million. That might make you feel rich, but the problem with that is that also exposes you to liabilities, because now if somebody's walking across your lawn and they break their leg because they fell onto a ditch or whatever, and then they sue you, well, now they see that you have these assets that they can come after you for. And so what wealthy people want to do is they want to have this net worth, they want to have this wealth, but they don't want anybody to be able to see it. That way, if somebody's walking across your lawn and they hurt themselves, well, you are only worth $0 on paper, so they can't really sue you for anything. Well, how do you do that? And the way that you do that is you don't own anything under your name. Let me give you a hypothetical. Let's assume that you are investing in rental properties. Jaspreet Singh invests in rental properties, but the problem is if Jaspreet Singh owns the property, now my personal assets are at stake, because if somebody slips and falls at Jaspreet Singh's property, well, then they can sue Jaspreet Singh for all of my assets. And so what I want to do is make a shield between the property and me. And one way that I can do that is to use an entity. For example, an LLC, which now says that it is Jaspreet Singh LLC that owns the property. Jaspreet Singh owns Jaspreet Singh LLC. Jaspreet Singh LLC owns the property. And now this property is its own entity. It's owned not by Jaspreet Singh, it's owned by Jaspreet Singh LLC. That way now if somebody were to slip and fall on this property, they break their leg, insurance doesn't cover it, and the judge says, you are entitled to $100 million. Well, the most that they can take is whatever the owner of the property owns. And the owner of the property is Jaspreet Singh LLC, not Jaspreet Singh. So if the judge says you're entitled to $100 million, well, the most that they can take is whatever this entity owns. How does this apply to you? You can create different entities like LLCs to own different assets. That way you can provide yourself some legal protection. But make sure, number two, you hire smart people. There are three types of smart people that you want to consider investing in. Number one is an attorney. Number two is a financial advisor. And number three is an accountant. If you have any sort of wealth, then you want to consider getting an estate planning attorney, because their job is to help plan your estate. Meaning, when you die, there's a plan on what happens with your assets, because the last thing that you want is for the government to tell your family what is going to happen with your assets. So if you have wealth and you have a family, or you have a plan on what you want to happen with your assets, go out and get yourself an estate planning attorney. And as you build more wealth, there's a lot more sophisticated things that you can do even when you're alive with your estate by building trusts to now decide how to protect your assets from potential taxes, and how to pass your assets along, and how to build a plan for your assets. If you are investing in real estate, if you're building a business, then you can get into more specialized business attorneys, and there are many different types of business attorneys. I highly recommend you look for specialized attorneys, not just general business attorneys, as you get more specialized, because you want a real estate attorney if you're investing in real estate. You want an internet attorney if you're building a digital business. And so different attorneys are going to have different skill sets. There's going to be your general business attorneys out there that can help you review contracts and other things like that. But as you start to build your business, look for specialized attorneys that understand the law in the industry that you're looking to build in. Number two are financial advisors. As you start to build more wealth and you want to have some extra guidance, or you want an extra pair of eyes to give you some help on how do you actually manage your money, this is where having a financial advisor can be very handy. Now, one of the things I like to say is, as you go out and get a financial advisor, don't just expect them to do all the work and understand what your goals might be. This is where it is important for you to have at least some base level of financial education. That way you can go in and help guide the financial advisor. Think of it this way. If you walk into the hospital, you have some issue with your arm, the doctor says you got to chop off your arm. What you'd want to do is get a second or third opinion. That way you have a little bit more of an educational base as to what the right plan of action is before you just cut off your arm. It's the same thing with your money. Just because one financial advisor says something doesn't mean that's the only way to do something with your money. So you want to have a base level of financial education going in. And if you want a financial advisor, this is where you want to make sure that their goals are aligning with yours. If you want cash flow, make sure the financial advisor understands that. If you want more growth with their money, make sure they understand that. So if you want to use a financial advisor, great. Nothing wrong with that. Just make sure that you have a base level of financial education. That way they can supplement and help grow your goals instead of just following what their goals are. And the third thing that you want to think about is an accountant. And this is especially if you have a business or you're investing in real estate. If you just have a W-2 income, there's not much tax planning that you can do. And the reason why is because you probably don't qualify for a ton of potential tax write-offs or a ton of potential tax breaks because your W-2 income is taxed before you even get the money. So there's not too much that you can do. Now, as you start to earn more money, it might make sense for you to get on a call with an accountant just to make sure that you're not overpaying in taxes. But in general, if all you have is a W-2 income, there's not much tax strategizing and tax planning that you can do. But if you build a business, this is where having an accountant really starts to matter, because now it's up to you to pay your taxes. And when it's up to you to pay your taxes, it's up to you to decide how much is your taxable income. And the problem with that is if you do it wrong, you could end up in jail. But if you do it right, you could now pay a lot less money in taxes legally, assuming you can qualify for the tax breaks. And this is where you want to have a good accountant that can help you qualify for those tax breaks, because what a good accountant is going to do is they're going to help you plan your taxes. They're going to help you plan for these tax breaks, and they're going to keep up with what are the tax changes that are happening, because the tax laws are changing all the time. Anytime you see a new president, you see the tax laws change again. And this is where having a good accountant can help you. Now I'm going to give you a little bit of personal story here, because I have hired good accountants and I've hired bad accountants. I used to have a very bad accountant. He was cheap. What that means is I paid him a very little annual fee to do my taxes. And all he did was my taxes, kind of. He was always late on my taxes. I paid a lot of penalties and fines and just fees because he did a lot of things wrong. And then I found a good accountant because I was getting so fed up. Actually, the reason why I got fed up is because I got a call one day from my accountant in January, which is never a good thing. I'm in my office, my accountant calls me January, early morning, and he said, "Jaspreet, I made a little mistake. Could you do me a favor and wire the IRS $100,000 by the end of the day today?" And then he went on to tell me that I had to send an additional $18,000 to the state of Michigan by the end of the day, and that I might have to pay some penalties and interest on this as well. I was very frustrated, and so then I proceeded to fire my accountant and find a good accountant. The good accountant that I hired cost me many multiples of what I was paying previously. It cost me a whole lot more money. But number one, it saved me a lot of stress. And number two, it saved me a lot of money in taxes. Why? Because now we do what's called tax planning. And this blew my mind because I didn't realize that an accountant could do tax planning. That's why I'm sharing this with you, because I hope that you can learn from my mistakes. Because what tax planning is, what a good accountant will do if you have a business as you start to make more money, is they're going to meet with you. Ideally, at least once a quarter, maybe once a month, depending on how big your business is. And they're going to say, here's what your income is, here's what your expenses are, here's what your tax liability looks like. We should pay these estimated taxes, but there are these things happening in the IRS, and you can qualify for these deductions if you do X, Y, or Z. This way you can potentially pay less money in taxes. Here are other things that you could do to potentially pay less money in taxes. Have you considered putting some money here? Have you considered doing this? That way now you get an understanding of what your tax liability is and different things that you can do to potentially lower your tax liability. That's what a good accountant does. So if you're building a business, if you're investing in real estate, as you start to grow, please consider getting a good accountant, because if all your accountant is doing is filing your taxes, you are leaving a lot of money on the table. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.